All right, so right now I'm in my apartment in Dubai and I just paid the entire monthly rent with one single trade. I made around $4,000 trading this simple model, and I'm gonna break down the entire trade so you can learn how I did that. This trade was sent out in my private Discord server, so my students made money as well, and I did as well. Now, it doesn't mean that we do not lose in our private Discord. Of course, we have days where we lose, but we consistently make 7, 8%, even 10% per month consistently. So I will not waste any more time, and I'm going to break down the entire trade, what I looked for. So, by now you must be familiar with external liquidity and internal liquidity. Now, this trade was built upon those concepts. I used those concepts to frame a trade, but then there was more to that. I looked for something else, and that small secret is gonna basically make your win rate skyrocket. All right, so now let's go on to the charts, and I'm gonna teach you what I look for in the trade. All right, guys, so here is the trade breakdown. So I was looking at Euro CHF on the daily time frame, and what I always look for is from external liquidity, which is basically any high or low, and then I look for fair value gaps, which is basically internal range liquidity, right? So over here we have a fair value gap. So price only does two things. It goes from external range liquidity to internal range liquidity, or it goes from internal to external. That's all you need. All right, so once the body closed here and we took out external range liquidity, and plus point was we also filled this tiny fair value gap that was here, right? So now once that happened, what I simply did, I dropped down to 1 hour time frame, right? And I was looking for a fresh market structure shift, right? So this is where the fair value gap formed. So now I want a fresh market structure shift, right? Now we have this low over here, and that is basically liquidity, right? Now, why did I consider this a liquidity? Because the fair value gap formed here. So once a fair value gap forms, we need to see some form of liquidity sweep or a low taken out, and then we look for a fresh market structure shift. This is very important, and a lot of people make this mistake. So now, if I move forward with this, you can see that we simply took out this trade. Now, what do I look for? Yeah, because we simply got a shift here. I can simply take my entry from this fair value gap, but no. What I essentially look for is once we get a market structure shift on the 1 hour time frame, I'm looking for a higher high, higher low, and then a higher high formation. And then I'm waiting for price to take out the higher low, right? This type of liquidity sweep is so much powerful that, once you have like your draw on liquidity on the higher time frame, which is the daily time frame, right? We are marked out this fair value gap, right? I'm looking for this type of pattern where price takes out this low, and then I drop down to a lower time frame, then I look to frame my trade. So I'm not going to enter here. We did get a market structure shift, and that confirms that we're going to go towards this daily fair value gap. All right, but now I'm going to wait for price to give me that higher high, higher low, and then a higher high formation, right? And price goes up, and we have this low over here, right? And I'm looking, and I was anticipating that this low is going to be taken out. So now, once this low was taken out, right, I marked out these equal highs, right? And then I dropped down to 5-minute time frame. Now that becomes our 5-minute market maker buy model. We have the sell curve, and now we have went into a buy program after we took out this low, a higher low, right? We're always looking for a higher high, higher low formation, or a lower low and lower high formation sweeps. And afterwards, you can see that we got this beautiful shift in the market structure. Afterwards, we had, if I remove this, we had this fair value gap in the discount. So that was my entry level. As you would have seen in the picture that I showed you, my stop went somewhere around here. And I simply go for 1 to 2 regardless of my target. So the actual target would have been this, but for my psychology, 1 to 2 is always the best. And I suggest you do that as well. So if I play this through, you're going to see that we went into some drawdown here initially, but then afterwards we pushed up and the take profit was hit. And you can see that we have these equal highs. So price will not take out this low unless, until we take out these highs, because this is how the algorithm works. And you can see that the take profit, the actual target was hit very nicely. So in summary, what I'm looking for is on the daily time frame for price to take out either external range liquidity or go into internal. But in this example, and I highly suggest you stick with this, always go from external to internal. Now, once the external liquidity is taken out, we simply mark out, our fair value gap in the premium, right? Or any fair value gap that is present. So once the external is taken out, I'm dropping down to 1 hour time frame, from daily to 1 hour and then to 5 minutes to take our trade. So afterwards, I'm going to drop down to 1 hour time frame. I'll look for a market structure shift on the 1 hour time frame, right? And then what I'm looking for is a higher high, higher low, and then a higher high formation. Now what it does, it creates liquidity or a continuation pattern, So this is a continuation pattern. Now, the continuation pattern is basically when price takes out the higher low, right? I do not want to see a pattern like this. So let me just do this. This is not a valid liquidity sweep or a continuation purge for me, because we didn't create another higher high. We had a higher high, and then we had a lower low, lower high, and then a lower low. We do not want to see that. This is not a valid liquidity sweep in my eyes when you are playing with this model. All right, you want to see another high formed, right? And that's going to create this low. Afterwards, once price takes out this low on the 1 hour time frame, now this could be anywhere, right? So let's say if we don't get a sweep of this low, we can get another break of structure, and we can sweep literally this low over here and then look for our trade. Or we can get another and then we can look for this sweep or something like this. You get the idea, right? So on the 1 hour, look for sweep of this, then drop down to 5 minutes, look for another market structure shift, and take your entry during kill zone hour. So that's going to be during the London session or New York session, unless you are trading, AUD or JPY pairs. You want to be trading in the London and New York session. That is very important, because otherwise you will be losing trades. And also, make sure that you're trading on the high impact news days. And one more thing to note is always trade after 10 minutes of the high impact news event, or 5 minutes, right? I would suggest after 10 minutes, because that's when the market settles down and you will not be, you will not be strangled in a search and destroy or seek and destroy pattern. So you want to be confirm that you have to wait for like 10 minutes at least. And then you take your entry, right? But of course, if there's no news at the time of your entry, right, you can just simply take your trade from the fair value gap that forms. Now, I suggest you go for 1 to 2, but you can also target the, the original consolidation of the market maker model. So it's going to be somewhere around here. But I suggest you take 1 to 2, or you can take your, a partial at the 50% of this market maker range. So it's going to be somewhere around here, and then you go break even, and then you hold till this level. Now I'm going to give you some more examples, so it is crystal clear to you how you can actually trade this model. My goal here is, as a free community, as a YouTube subscriber of mine, you are literally the same for me as my paid student. I would help you as much as I want to help my private students, all right? You guys matter a lot to me. And my goal here is to actually provide valuable information. I do not want to provide you with, null information that doesn't work. All right. Whatever is working for me, I'm teaching you right here. Otherwise, I wouldn't be teaching you. All right. So let me give you guys some more examples, and then I'm going to end the video. All right. So here is another example, and I hope you learned something from this. So I was looking at USD CAD on the daily time frame, and then I saw this external range liquidity taken out, right? So we have a 3 candle formation, so that makes it a high. So every high and low is external range liquidity. Now we had this, let me just mark this out, somewhere around here. Okay, so we have this fair value gap, and that is our internal range liquidity, or a higher time frame draw on liquidity, right? So now what I did was I dropped down to 1 hour time frame. Actually, I didn't take this trade. I don't know what I'm saying, but yes, you can see that once the external was taken out, I was looking for a market structure shift. And again, I said I was looking. I'm looking here for a market structure shift, and you can see that we got it. And then all you have to do is look for, a higher high, higher low, and then a higher high formation, right? So you can see that we have a higher high, a lower low, lower high, and then a lower low formation. Now simply what you're looking for is sweep of that level. So over here we did get a sweep, but you can see that we were outside the kill zone hours. So that was like around when all of the sessions were over. So we are not looking for this. But then when the Asian session started, right, we had this high over here. So we have a lower low, lower high, and then a lower low, and price took out that level. So this is going to be my draw on liquidity if I was taking this trade. And if I go to the 5-minute time frame, you're gonna see that just around here, you can see that we have a market structure shift somewhere around here. So that's when we got a break through it, but we were in an Asian session, so we do not want to trade it. However, you're going to see that we had this auto block, and at 2 a.m. that's when the actual London session starts. This basically is just when I look for my Asian session sweep models. Now, that's when you look for short positions, and this would have been your entry, right? You could have put your stop somewhere around here just to be on the safe side, and you could have targeted going for 1 to 2, or, this was the original. Actually, you could have targeted it because this was the original consolidation of the market maker buy model. Then this is the sell model. This is the sell curve. This was the buy curve, if that makes sense. So you could have held till here. And later that day, you're going to see that price just went ahead and took out these lows. So that would be it. If you are looking for my team to pass your prop firm challenge, with 100% guarantee, there is a link down in the description. Once you click on it, you're gonna join the Discord server, and in that Discord server, there's information on how we can do this. All right, so you have to read everything, right? And we're gonna pass your prop firm challenge with 100% guarantee. If we fail, we're gonna refund you with $200 extra, right? So yeah, if you want to check that out, that's okay. I do not suggest it, right? But if you're struggling with passing prop firms and whatnot due to psychological effect that it comes with passing the challenges, then just click on the link down below. It's a Discord server, a free Discord server. Once you join it, you're going to be provided with information on how you can purchase the service and how you can actually get it done. Thank you for watching, guys. I'll be back with more trade breakdowns once the new week starts, right? So see you guys around.